Hello and welcome back to my channel, Funny Fella Trader. Um, I just thought I'd make a video today on something I used to struggle with, and some days, admittedly, I still struggle with. And those are the days I will stay out of the market. But just based on market bias, can make a massive difference to your trading. If you are trading against the bears or the bulls, your your win rate, size, and percentage will be a lot smaller. If you're going with the momentum or the algorithm, then you're going to put yourself in a far better position. And this took me a long time to to learn because because the market is fractal, so it moves. The daily might be going down, but that day the fucking 15 minute could be going up. So depending on how you trade, really depends on what time frame you're going to make and lose money on. But I just thought, today, instead of breaking it down from the daily to the 4 hour, the same thing over and over again. If I was a swing trader, and this is how I look at daily bias, that helps me in my lower time frames, because I actually trade down and right down to the 1 minute. I just thought I'll make a video on the daily to show how I read daily bias. That'll give me the advantage of buying or selling in a buy or sell market. So, for example, looking at probably one of the most popular pairs, Euro USD, this market right now just looks like it's trending up. Algorithm is a swing higher, swing higher, swing higher. It's been moving up for let's say 287 days. So to go against that would be silly. But one thing that you should always, always, always do is look left. Because if I just screen in a bit, this whole perspective changes for me. And why? So just by removing this trend line, if you look, we had almost the same amount of time, probably even longer actually. Probably more close to, let's just take this out. Probably more, wrong one. More close to, well, there's 700 days of a downtrend in Euro USD. What do you think of the liquidity, the stops built above all these swing high, swing low, whatever you want to call them? Some people call them. That's the thing that actually confuses me as well. But all I can see, bar the fucking name of it, is liquidity. That is liquidity. On the moment that pushed up, is the moment the market saying to itself, we've went down long enough. We need to start. We need to start actually taking liquidity so we can go back up in this direction. But where's it run into? If we just zoom in, this is by looking left. This is a daily fair value gap, and for anybody that doesn't know what a fair value gap is, that is for another video. So I'm just going to extend this to the right. All right. So the market's run up into this fair value gap, and unless it takes out these highs, I'm going to be concerned at looking at buys. I'm going to be thinking to myself, I'm going to stay out till there's a certain signal, a certain candle that tells me things is about to change. On this moment, we see this push down and break this low, and this push up and not quite take out this high, is the moment I think if the next candle breaks lower than here, and especially over here, that would be the one I'd really be interested in at the minute. Then we're still bullish, because that's what the market's telling you. So let's just head forward. Nothing's broken yet, and now it's taking a new high again. the new swing low for me, the new break of structure I would like to see is this swing low taken out. If not, I would still be thinking, can it take out these highs? Can the momentum change, keep going, sorry, and take out these highs? And it doesn't. It breaks lower. It's taken out this swing low. Can it take out this swing low? And just going to remove this here because we know the fair value gaps are. When it broke this low, it also printed another fair value gap on the daily. From this candle's low to this candle's high. So what price tends to do is it'll close that gap. Like see where they all overlap, they've all overlapped the prices. Except for here. But the market may want to come back into that. So that's actually an area you could say to yourself, you know what, I'm actually quite interested in that area there. But right now, I'm not completely convinced. A few days have passed, and now it has definitely smashed through that last swing low. And that for me, bear in mind, has run on this fair value gap, has failed to take out these highs, and now is showing signs of breaking low. So this fair value gap especially would be interesting to me. This is where I would start thinking I might have a sell limit if I was using the daily. But remember, I like to break my time frame right down into the minute. But the idea of understanding the daily is if this candle runs into here and doesn't break this high on this candle, then for me, I am definitely going to start looking for sells. Whether I'm right or wrong on that, I'm definitely looking for sells. And also, I like to pull the fib from the last impulsive move. So if this fails to break this high, then I'll pull my fib further on down, if you know what I mean. So it has failed to break that high so far. Now it's pushed further down. I will take my fib further down. And now it's getting closer to the area I like to see between that 618 to 705 area. So what I'd like to see here is the market to retrace back and then possibly sink, building up orders. But I mean, this is the daily. This is you're waiting on days for setups like this here. There's it even further down now. So take the fib again. Now I'm really liking this fair value gap because I really like the 705 fib, and that's for another lesson. But it's not. It's just a confluence. It's building up confluences as to where I could possibly enter. And now the market started to come up again. I'd be thinking to myself, I would like to see a trade into here. My stop's just above just above this high. Nothing massive. Well, let's say round it off to 70 pips. That would be my stop loss. I would be looking at these equal lows are really scream out to me, but I don't like to go like I wouldn't like to go full that because the market mightn't bother. It might just be a retracement down here, run into this for a value gap one more time and then up. So what I'd like to do is I'd like to make that, and this is personal choice. This is the point where it's up to you where you aim for. Okay, it's up to you where you aim for. But I'd be thinking to myself, I'm going for a 1 to 7 trade. Should have come into here. That's where I want to be because it makes sense. Up here we have run into the fair value gap over to the left. We have broke this low. We broke this low. We have broke this low. And now we're coming back up to retrace, possibly to sink on further down. And bang, we're tapped in. The moment that comes into that area, that is when I personally be going down into the lower time frames and looking for a even more precise entry. But this is how I use the daily. This is what I expect. Now, yes, you could say to yourself, right, well, why don't you just look for buys here? Because that's not how I trade. I don't know if that's going to come up in that area. But the highest probability for me is we have broken down and we've printed an offer value gap. That's not confluence. We've took the the fib, sorry, on us. It lines up with the 705 fib retracement. And that's where I want to get in. That's where in the lower time frames I would excuse me, that's in lower time frames I'd be looking to get in. But how do you read the daily at this point? Each candle tells a story. Like the rejection of that tells me a lot. It's on especially this next day's candle. Like it's absolutely wiped this out. Now would I expect the next day to be another bearish day? No, I actually wouldn't, because just removing this for now, this area in here needs closed in, or else it's just another fair value gap. So it's consolidated and it hasn't quite closed in, but it's come to the equilibrium almost of this candle. What is equilibrium? Another story, another video. But it's near the half point of this bearish candle. And just to bring back the position we were talking about holding, so say 60, 70 pips. I think we're going for, was it 700? I know it was 500. 500 pips. Yes, this is a long wait. And you can use this here as a great target. Your first TP is to take out this low, because this was the retracement. And at that moment, you could turn around and say, right, I'm just gonna leave my trade to break even now. So I've took parcels. We are now running risk free, because we have moved our stop loss to entry, and we're using this fair value gap over here, these lows, and the fact that the market might want to come down, take out these equal lows as a good target. But ultimately, 500 pips is a lot of pips. Now, this is where people close trades. If I just highlight this area here, this is consolidation. This is a consolidation area. This is what scares people. This is over a week, like 1, 2, 3, 4, 5, 6, 7, 8, 9 days before it truly breaks out of this consolidation area. And this is where people get nervous. They don't want to hold their trade after. They think, oh, the market's taking out this low. We could come back. And it could do that. It can do that. Absolutely it can. But you've already taken parcels at your TP1 here. You've now dropped your risk to zero. It's now time to let the market play out and see what it's going to do. And this is where it tops you out. Now, if you're making 500 pips in how many days is that? That's a month. That's a good swing trade. If you're making 500 pips in a month, and I don't care who you are, that is a good month. A very good month. Now, considering you have, say, you're risking $50 a pip, that's 25 grand in one trade. 25 grand in a month isn't too shabby. We'll let this play out. There you have one trade done. The market's showing you that it's starting to look a wee bit bearish. Now what's going to happen? Let's just move this. Move this. Where's the market going again? Let's come back up into that again. It has broke slightly higher, so this is where I'd be saying to myself again: is it going to come out, take out these highs? Is it actually going to now move and take out these highs? What today would be a stupid day to enter the markets because we don't know. I don't know. No trader actually knows. Consolidating, pushed above it. Still hasn't broke these highs though. I'll just move this here. No, that fair value gaps there. Still hasn't broke these highs. I want it to break these highs if I'm to start looking for buys again. But now the market's showing signs of breaking down, especially in this candle. This candle is showing me that this bunch of candles, we'll just concentrate on this one bunch of candles in this area here. This was the last swing low before the next impulse swing high. But that swing high hasn't broke over here. So the market is still bearish. It hasn't printed any fair value gaps worth talking about. Starting to break down even further. Bang. That is the market telling you exactly what it wants to do. Because it has taken out the more predominant swing low. It's printed a fair value gap in here. It's left another fair value gap here. Where would I be interested in entering? This is where I'd be interested in entering. And this is ultimately where I would look for another sell. I'll put my stop loss just to be on the safe side above this high because we have a wee fair value gap in here. So rounding this off, we'll say 195 pips. Where am I going to aim for? I'm definitely going to aim for these lows now. And this ultimately would be where I want to take my first take parcel because I want the market to come down now and take that out. And if it doesn't, that's okay, I was wrong. But if it does, I'm almost certain now that this swing low, and especially now that I know all this liquidity is still lying here, this swing low would interest me the most. This would be the swing I expect these equal lows to be taken out. And it might never get tapped in. It might not even come back. And it doesn't look like it's going to. And that's it. That's just a fine example of waiting, waiting, waiting. This is why I don't like swing trading because you can wait for a long, long time and no setup come. The market didn't come back in to reprice, and this is a big ask for a value gap, really. And the market hasn't even come back near it. Now, will it after it's broke these lows? Possibly. We should just play it out for the crack and see what it wants to do. No, it doesn't want to. Where's the momentum now? Heavily, heavily bearish. And just to add confirmation, this is something I learned of ICT was, and by the way, this is not to use as entries. This is to use as a confirmation as, yes, the strength in the market is bearish or bullish. So whenever that purple line, which is the EMA 9, right? Whenever it's below the 18-day EMA, that is a sign of bearish momentum. That's where I would look for sells. Or like if we go over here, the 9 is above the 18, and that's a sign of bullish momentum. Let's look for buys. Now, these are not to be used as signals. These are not like, oh, it's touched this line, I'm going to go buy or sell now. That's sort of balls. That's just a confirmation to show you that let's look for sells until this is completely smashed through and telling us something absolutely different. People use indicators as a way of entering trades. Not to me, that's stupid because they lag. They're not on time. They're not in the moment. It's all right back testing and looking at it this way. Completely different in the moment. So in hindsight, we missed out in a trade here. The market never came back, but we do know the market is bearish. And that's not to say in the lower time frames here, could we have got an entry? Absolutely. But let's not forget over here, you've just made 25 grand on 500 pips, risking $50 a pip on a 100k account, which is what nearly everybody would go for in a prop firm challenge. It's the one I didn't go for it first. I went for the 35,000 and I actually lost it and then I got it again and I learned how to handle it and then I went from that to the 35,000. I'm sorry, to the 100,000 with a different prop firm just because I liked their rules. So um, that for me is how I would read daily bias. I would use always looking left. Always want to see. Just going to remove these again. Always looking left. Always wanting to see if this is the higher highs going to be taken out, the liquidity, or is the fair value gap that's been printed or an order block, whichever one you like to use. How does it react again? That how does it push through easily? Are you willing to have the patience take time um and actually see what's going to happen? Are you going to rush it? Every single candle tells a story. Every single candle. Like clearing all the drones, remove all the drones off this. Just to reiterate everything we went through. This run into fair value gap on the left. It took out this swing low. It took out this swing low. It printed this fair value gap. And it's telling us now that we've went up long enough. We need to start taking liquidity on the downside. But we're going to start stacking our orders, which they did once and twice here before it absolutely melted away. So you have to be patient, especially on the daily time frame. But it is a brilliant time frame to give you an idea of what you should be doing that if you're an intraday trader. Going out to the week and the month, yes, you can skip out that very quickly and think where is more likely to go this week. Where's liquidity land? But I really like because I like short trades, maybe half an hour, sometimes a few hours. The data for me tells me all the information I need. This section here told me everything I needed to know to start looking for sells, wait for sells, and this is where people lose money because they cannot wait. And what helped me was I just have three other pairs I can look at in the time being. So the likes of GBP USD, which is one of my favorites, and USD CAD and gold. You can find a trade nearly every day, but you don't have to trade every day. Like that one example, that trade would be 25,000. People make that in a year, working every single day, and you just made it in a month. You have to be realistic and you have to be patient and you have to have an understanding of what the market's going to do and you have to have courage because if they just had a run on through that for a value gap, I don't give a shit. I'm just trading in that moment and what it's telling me to do, and that's exactly what you should be doing. Read the candles, understand what it's telling you, understand why it started to move down now because it's already wiped out all this liquidity over here. It hasn't broke these highs. It can't. Right now, it doesn't have the power, the momentum to do it. And it started to show signs of breaking down. And especially when it took out these lows, that's goodbye. That's when it just play it on out here to see how far it actually does go. I hope you enjoyed this video. I hope that you've got a little bit of understanding about how to read daily candles. Look left. Look for areas of interest. Look for value gaps and order blocks. And if the market is struggling to push through them, then that's when your light bulb should be coming on in that moment and saying to yourself, I need to start looking for sells here. I need to start looking for buys here. Let the market tell you. Don't you tell the market what you're going to do. Like, you can't just go into this day here and be like, I'm just going to sell today. Yeah, I'm just going to hit sell button because that's how you make money. No, it's fucking not. It's having patience and vision, looking at each stupid wee candle. They're not stupid. They tell you something. That candle there is probably the most important candle in the whole setup because it did print that fair value gap. It did break this low. And this one's special as well because it done exactly the same thing. The only reason I went for this fair value gap instead of this one is because of that pullback. If it's not over 50%, then I'm not interested. And then when this printed, it just lined up beautifully. 705 in that fair value gap. That's a sell sign for me. That's probably what I would call a low risk trade. And the thing that adds to it that I haven't put in here is I look at the DAX as well. You know, in regards to how's the DAX looking? Is the DAXy, the US currency index, is it running into fair value gap? Is it wiping out liquidity? Does it now need to move up and gather strength? So when the USD moves up, Euro US dollar moves down because the dollar index has got the strength. So that's a short video on it to show you that sometimes you will get a trade. You seen the second one I would have set up. I didn't get in, but I'm in no rush. I'm on a lower time frame. I can get a trade every single day, but there's no point. Pick your trades, pick your moments, and I hope this quick tutorial is showing you how to use the daily. Now I have a Discord group I've started now. I'm starting up a mentorship, and for them members, I'm only going to take on 20 because I want to be able to give my time to 20 people for 12 months. I don't want hundreds of people. That to me isn't, you're not going to learn that way. So anybody that's interested in joining the mentorship, follow me on Instagram. There's a link in the bio. Send me a DM. It's a brand new channel, a brand new page on Instagram, so don't be afraid. Uh, and I'll go into even further, even master detail about this. I hate saying master actually. Master detail. You're always learning the trading. Everybody's always learning the trading. And even when you think you know it all, and I have done that, I have been a shithead. Like, oh, this is fucking easy, and the market's be like, oh, is it now? And just hits you slap in the face and reminds you like you work on their terms. So if you want to know more but having to read bias and putting the percentage in your favor and how to read in each individual channel. My Discord channel, I'm starting a mentorship, as I say. I'm going to go into massive detail for 12 months, everything you need to know to be a hugely profitable trader, provided you put in the work and provided you have the understanding that we are all different. We don't learn as quick as others, and that's okay. Some people pick it up like that, and some people take a couple of years. Some people, their psychology is they don't give a shit about money. And they seem to be the ones that thrive the most, if you ask me, because they don't look at money the same way that somebody that really, really needs it looks at. And when you're when you really need the money, you need it now. You force trades, you don't have patience. You go into trades you shouldn't, and you ultimately lose money. And you break down your account. Next thing you know, oh, this doesn't work. This forex is shite. I can't do. It's all a lie. It's a scam. It's not. It's because you don't have the patience. You don't have the attitude that you will not quit and you will figure it out. But that's why I want the support group. That's why I want the mentorship. That's why I only want 20 people to join it. For more information, you want it, give me a shout. Well, we have 17 spaces left. Only started to advertise yesterday, just on my local page. And yeah, let me know. And I hope you enjoyed the video, and happy trading, folks.